Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's July 2nd. We start the third quarter today, and we got a short week this week. We do got some important data coming out this week, but a lot of that's going to be pushed into Thursday and Friday because we have the jobs numbers coming in. So stuff that will come out typically on Wednesday, which is 4th of July, is going to be pushed to Thursday. Things like the ADP employment numbers, the weekly jobless claim numbers, and then Friday we'll get the BLS, which is jobs numbers coming in. So those will be all important news coming in this week, and let's kind of jump right into it. Today we got the manufacturing data, so we got the market manufacturing PMI for the month of June. This is the final number. They give us like a uh, initial reading, and then they give us a final for the month, and then this happens to be the final. So the last reading came in at 54.6. The final came in at 55.4, so it went up. ISM manufacturing index for the month of June went from 58.7, and the forecast was to be at 58.3. Instead, it went up to 60.2. So both indexes show manufacturing in a rising level, which is obviously a very good news. Anything 50 on these indexes consider optimism or expanding in these type of indexes. So very good numbers here overall. And then last but not least, we got construction spending for the month of May. So in April, we had a 0.9% increase in the construction spending, and the forecast for May was supposed to be at 0.5%, and kind of relatively in line, but slightly lower at 0.4% for the month of May here. So let's take a look here at the headline news. Stock market is down. It's taking its cue. Again, this is going to be a short week, and tomorrow the markets will be closing early, and then of course they'll be closed on Wednesday. But it's taking its cue. Of course, where it's been taking its cue is talk about the U.S. trade and its relationship with its partners. And right now, it's been kind of dwindling of late. And there's been more tough talk on both sides coming forward. And the latest is, I guess, reports are showing out of at least what we being reported on Market Watch, is that Trump's administration has worked on drafting a bill to basically abandon the rules from that was in place by the WTO. So what they're saying that means is that basically he could put whatever tariffs you want without any congressional assistance. So basically, he doesn't need to go to Congress in order to enact these policies. So with that in mind, the markets are kind of in the red so far today, and so let's kind of see how this is playing out with the bond market and such. So as you can see, we started off the day pretty good here, above the double resistance here. So we got this Fibonacci line right here. We got the 100-day moving average. We started up above it. So we've dropped during the day here, and now we're at unchanged levels from where we left off on Friday. So obviously there's no change in pricing today so far. And then on the Treasury side of things, we're up one, so we're up at 2.86 so far on the Treasury here. So we're kind of in this middle range here, so it could go one way or the other way, and still below the 100-day moving average, which is kind of helping the interest rates. So, and as you can see, the drop in the 25-day moving average is going to create a double ceiling resistance here for the Treasuries and yields, and which will kind of help create a little tougher level to break above for them. So as you can see here, it tried breaking above it when it was almost about a double resistance here, and it pushed it down further. It could potentially push this down a little bit further, but on the other hand, as we talked before, is it's a new quarter, and the Fed will be unloading more mortgage-backed securities and treasuries and in this month. So again, be prepared for a jump because there's just not a lot of demand for it. And with a lack of demand, that means price will come down, rates will go up. As a result, that's what we saw in January. That's when they did it. It's also what we saw in March when they did that, and that's basically when they started. Was the Great Unwind was started in January. So again, this is what we're seeing so far. This kind of so basically rates are at no change so far. There's no change in pricing for interest rates today. Again, we could have some volatile swings because a lot of big hedge fund guys that would normally control the markets are on vacation for the holiday. So again, be prepared for some volatility this week due to smaller investors out there that could create market swings and throughout. Plus, we got the short holiday, so we could get could benefit bonds in the sense that people might want to park the money for that safety flight to safety. But again, the Fed at some point this month. I'm not sure if it's this week or next week, but they could be unwinding, and we could see a big jump in potential jump because what we saw on average is about 0.25% to the rate in interest rates spike up. All right, so just be prepared for that and enjoy the rest of your day. And I hope you guys enjoy the rest of your week as well. Have a great day. Thanks so much for watching. We'll see you guys tomorrow. Bye bye.